A lot of these guys are fearing what is taking place. Jamie Dimon says this is the most dangerous times we've had in America in decades. Michael Burry shorted the S&P 500, $1.6 billion of his clients' money.
My intuition is that a recession is inevitable, but the market can remain crazy longer than you can remain solvent, whatever the quote is. Why hasn't it happened yet? Only the paranoid survive, but how do we turn paranoia into an action plan?
Yeah, so everything is right now about mapping out different possibilities. World War III takes place. What do you think of the chances of this taking place? Ray Dalio says 50%.
Yes,
okay. So if World War III happens, what happens to the economy? Who's going to be the parties involved? Are we going to be involved purely through proxy, or is there going to be attack here? Then you write down the possibilities. Okay. If this happens, what are you going to do? If this happens, what are you going to do? Then next, what happens if unemployment all of a sudden goes to 7%? What happens if inflation goes down? What happens if Powell starts lowering rates back down to 5-4%? Holy, that's going to be crazy. But here's a couple things that we have to be thinking about. Credit card debt, highest it's ever been. You know what's the craziest thing about credit card debt being the highest it's ever been? The average interest rate on credit card is the highest it's ever been.
Jesus.
Forget about the debt. So people are worried about the debt. The average is 23% on credit card. You know what 23% means. That means the debt doubles about 2.5 years.
It's like loan shark.
That's loan shark. 3 years, your debt is doubling, right? But that's what we got right now on credit cards. So our debt is record breaking. Forgiveness for your school loan is gone. So now you have to start paying for it. That's $300-$400 a month that people are expecting. I think October, November starting. Then go to the corporations you were talking about that are borrowing money. This year, their interest payment is going to end up being around $530 billion. Just interest.
Oh my God.
Next year, it's going to 730. Next year, it's going to 1.1 trillion. In the next 5 years, it's going between 1.3 to 1.5 trillion dollars just on the corporate debt. Let's go to the next one. That's the scariest one. US has $33 trillion of debt, worst it's ever been, the highest it's ever been. What does that really mean? No, I can't really figure it out. Here's what it means. Every single time the rates go up 1 point, just 1 point for the US government, our interest payments increase by $320 billion. So imagine we raise rates by 3 points, just interest, it's $1 trillion more per year. If it's 6%, $2 trillion more per year. That's that. Next part, mortgages, we're not saying anything crazy with people with bad credit not making payments. We're still good. Car payments and subprime, they're seeing a spike in defaults where people are not making car payments. The first sign you're seeing on what's taking place. Then last thing that I'll just kind of get you to be thinking about. Anytime you want to know if the economy is back to normal, go to Vegas. If Vegas is humming, like, okay, we're good. And always, whenever you go to Vegas, talk to cab drivers and talk to the drivers who are doing Uber. Always ask, how's conventions doing? Are you noticing things canceling? No, this has been crazy for us the last 3 months. Everything's good. But if they start seeing a downturn, they're typically an indicator of what's to come. One of my friends, their construction company does very well. We have these 3 clients that we have who are doing transportation. 2 of them, numbers are down 40-50%. One of them is doing $1 billion a year. Their revenue is down 70%. Why would transportation be down 70%? Aren't Walmart, Amazon companies ordering stuff to ship it from here to there? Why would that be lowering? What do they know that we don't know? Again, these are people who have data to insider stuff that we can sit there and say, these are great indicators when you're studying these things on what's going on.
Because only the paranoid survive, there's actually 2 things you need to be paranoid about right now. Paranoia number 1 is you can pull out of the market too soon and miss real opportunities. And since no one is going to be able to accurately forecast the timing, you have to be thoughtful about that. So one strategy might be just that you dollar cost average in every day, make sure that you have a certain amount of savings so that you're not going to find yourself in a panic situation. The whole purpose of having cash in a bull market is to make sure that you don't have a forced sale in a bear market. And I thought that was a really wise way. So we're going to optimize for options. To do that, you're going to want to be largely in cash and index funds. When I say cash, I'm talking money market, treasury bills, something like that.
5 points, right?
Yep. Which is kind of amazing. All day, every day, I'll take it. Now would not be the time, in my opinion, to invest in anything where you're not just an absolute complete expert, where you have so much disproportionate knowledge that you're able to really recognize a deal when you see it. But that's my rough guidance to myself.
I think it was fantastic, and we're very aligned. Look, you're sitting there watching some of these guys sitting on a lot of cash. Why are they sitting on a lot of cash? Are they sitting on a lot of cash in case it's the fan? Is that what they're doing? Or are they just kind of sitting on a lot of cash, wondering, I don't really know what's going on. When I say people, I mean Berkshire Hathaway. I mean, these guys have a lot of cash right now. They're sitting on the table. Maybe they're not buying value stocks yet because they don't yet believe value stocks are here. If you're not in this business, if you're not in the business of investments, financial advisor, broker, day trader, don't play around and get crazy about it. Crypto, a lot of people got into crypto and NFT, and that was not their world. They didn't know about it. They lost a lot of money. I mean, a couple guys made $90 million, but the people that bought their stuff lost $89 million, but they got their money. There's a lot of guys that made the money in NFTs, but it was a gamble for everybody. And everybody's like, oh my God, but I believe it and all this other stuff. Okay, great. It's pretty crazy. Does that mean NFTs are going away? Absolutely not. My kids still buy stuff on Roblox and skins and all that. There's an element of it that is not going to go away.
Guaranteed.
Is there 95% of NFTs that are not coming back? Yes, probably. Some of them are going to be gone. I have interest in things I know about. Jamie Dimon's got a $900 million art collection. Why? He showed me this yesterday that he paid $200,000 for it. That picture is probably worth $8 to $10 million today. Money in art being made, again, non-duplicatable assets are very, very valuable. Whatever there's few of, very valuable. But only touch it if you know a lot about it. If you know nothing about crypto, don't even get close to it. Don't get too crazy. Oh my God, I'm hearing, Bitcoin's going to go to 100,000. It may go to 500,000. But don't do it because you're guessing because somebody else said it. Do it because you've done a lot of due diligence in it. So if you don't want to have that kind of a risk tolerance, indexing is the way to go to play it safe. Now, to the small community of crazies that have an itch and a tolerance for madness. When you have a certain amount of money, I'm talking to my golden guy. He comes in, we're having our conversation. He says, hey, here's what I think we can do with this amount of money. I said, okay, what about it? He says, here's a strategy we can use the next 90 days. I said, do you have any questions for me? He says, I got one question for you. Are you okay if in the next 6 months we lose $55 million in this? What a great question. Just straight up. And I'm like, no, I'm not okay with this.
Big nut.
He says, no problem. Totally get it. Then we can't go the way that this is one of the options we can go in. Because what do you think are the chances of a World War III happening in the next 6 to 12 months? I don't know if I'm at 50%, but I'm at 10%. Well, 10 is pretty high. Okay, if that happens, how bad is it going to be? Like during COVID, Dow went to 18,000. I don't know if you remember for that minute that Dow went to 18,000. Everybody was like, holy shit, what's going on? But very quickly went back to 32,000. So it recovered very quickly. So what does this mean? If you think a possibility of craziness is going to happen, that you keep cash and it happens, you can buy in dollar cost average. Okay, yes. You think you're that brilliant that you can time it? Historically, very few people have been able to do it. And those who did got purely lucky. Do you want to be part of that camp? Because most people, historically, what happened to them? They missed being in the market on the 5 best days.
Right.
And missing those 5 best days ended up costing them the difference between making 13% over a 20-year period to making 7.8%.
Correct.
And that's a lot of money, by the way, between those two. So if that's not the world you want to play, don't do it. For me, the game we're playing is a different game. There's going to be a lot of assets for sale the next couple of years. And if you've made the right choices and you have cash and some of these assets don't perform the next couple of years, there's the opportunity to pick up assets. There's different levels right now in the marketplace. If you have cash, a lot of it, companies are going to be for sale the next 3, 6, 12 months. And there's going to be a lot of opportunities for you to increase your market share within the industry. If not, you're somebody that doesn't have a very high risk tolerance, do not screw around the next 6, 12 months thinking you are Nostradamus and you can predict the future, because the market's going to destroy you. It's undefeated. Does this mean recession is going to come here? My bigger fear is a reverse market crash, which Venezuela just went through. All of a sudden, rates get lowered and Dow and S&P goes. And Dow goes from 33, 40, 45, 50, 55, 60, just goes boom.
Is that just the dollar losing its purchasing power?
Yes, exactly. That's what happens. The more we're printing, like the inventory increases the more we print money. The more you print dollars and it's more accessible, the less it's value, the less it's worth. You sit there and you're like, okay, so does this mean guys are not going to make a lot of money? No. You're going to see the first trillionaire in the next 24 months because none of this is going to affect the guys at the top. None of it. Every time they print money, the guys at the top make more money. If there's anybody that should be against printing money, it's low and middle income families. If there's anybody that's for printing money, guess who it is? The guys at the top. Why? Because the poor in middle America can't keep money. They spend it. And when they spend it, what do they buy? A product owned by somebody in the S&P 500 or other people who have businesses. Money flows up. They can keep printing money all they want. So when low and middle income families are like, look at these guys, all they care about is themselves. Let that bill pass for $2.7 trillion. You simply look at them and you say, you have no clue how money works. Guess what? Let's print $10 trillion. Rich are okay with it. You ain't going to get the rich complaining about printing $10 trillion or $5 trillion. BlackRock's going to be like, all right, cool. $8 to $10 trillion of money in our ETFs, and we're buying up a bunch of different companies. We're buying up all these properties today. Right now, it's going to be nothing. But in the next few years, you have to go through us, and we dictate the market, and we're going to own it all. And what are you going to do about it? These are a lot of different moving parts that is going on to.
In part 2, Patrick Bet David dives deeper into the specific steps we need to take to navigate this crisis. Make sure to subscribe to the channel and hit the notification bell so you don't miss Part 2. In the meantime, check out this video to learn what the legendary investor Warren Buffett thinks about the deeply concerning economics of the United States of America.